Oh, he's doing it. Oh, he's doing it. Oh,
Oh, we are live. It is another episode of Rates and Ladders. And I wasn't here last week and I had no idea what went on.
We talked about rates and we talked about ladders.
Nice. Fun game. Thanks for joining us, everyone. We're just going to have a bit of a chat as usual and keep it nice and short, but tell you what's going on in the market and how we can potentially help. Dom does some really cool work during the week. And one of the things he picks up on and goes on, what's it called, Dom? The website you go to?
Answerthepublic.com.
Answerthepublic.com. So if anyone's never used it, it's actually really interesting just to go on there anyway. So you can find out in certain sectors what people are Googling and asking and what's hot topics really. And one of the hottest ones on there, I'm just reading now, says there's not enough stock coming on the market. Why are there no houses available for me to buy, in a nutshell? So maybe it's important that we talk about that. So yeah, is the property market still alive? Matt, what do you think?
So we were talking last week about how we've all been pleasantly surprised coming back after the new year. Things are happening. And that's certainly been my experience in January, much to my surprise, really, after Q4 last year. And I know you guys have had some success recently in January with a few sales. And when we were discussing that, I think that's just testament to the market at the moment. It's just so much stronger than I think the papers would have us believe. So I'd be interested to know a little bit more about the sales you've had over the last couple of days, because I understand they are not what people might think.
Yeah, I mean, I'm quite happy to share some bits on that, actually. I've got, there'll be some posts going out over the next couple of days. So we give people a bit of a snippet. You may have seen some on our media. We did, I think myself and Neil did 4 open houses across the weekend. I had 3 on Saturday. And there was over 25 viewings on those 3 properties. I had 14 offers come in across those 3, and all 3 are going under offer over the asking price. 2 of them fairly considerably over the asking price as well. There's a number of reasons why, because it's about how you pick the right price to market at and the marketing and so forth that goes behind it. But I'm going to cry out for more properties in those areas, because I could sell those houses 3 or 4 times over to fantastic buyers. There wasn't a great deal to choose between them. Really good buyers, a lot of people with mortgages ready to go, understanding those rates currently where they are. I think that's key as well. People are happy to progress with the current mortgage rates there are and still pay fair prices for homes. So there is a market there for people if they want to move. But I think we need to show some positivity about it. Because I think if I didn't know anything about it, I think everything was a bit dead.
I'll give you a little sneak peek on that, Dan, as well. I was chatting to a possible seller earlier who saw one of the properties that you were dealing with that is very similar to hers. She saw that. She'll probably be watching because she's a super fan. Shout out. But she's been watching us for ages. I've been chatting to her for the last probably about a year because they just weren't ready. Very similar house to what you'd listed a week ago. And she said to her husband, she said, there's one that's like ours. Let's wait for that to go off the market so that we sell ours. Turn a couple of days later. Oh, look, the boys have sold it already. So that'll be coming to the market next week. So there's one for you.
That's good news if you're looking at buying.
Exactly. But no, I'd say mine was the same. Mine had a bit of history to it, to be fair. And if anything, this will probably give people a bit more confidence as well, which is what we want to do. But it was a property that I actually sold in the summer of last year. Unfortunately, the sellers lost out on the one that they were interested in. Buyers decided that they didn't want to wait any longer because the interest rates were going up and they were concerned. So they decided to jump ship and go for another property. Gave the sellers the right advice. They just held it off the market until they were ready in the new year. Got it back out. Pricing hadn't changed too much. Obviously, it was summer. Pricing, if anything, it dropped a little bit, but kept it at the same price. Interestingly, and I know us 3 were chatting on it about this last week, my experience at the moment is, like I was saying, instead of having 30 viewings and 15 offers, the numbers are a little bit lower, but properties are still selling because you obviously only need that one person. And interestingly, last time I sold it, I had 5 offers on it. This time I had 3 offers on it. I had 16 viewings and 3 offers, 2 of which were actually under asking price, which again sort of shows that people are just chancing their arm. And to be fair, those guys were investors, which I think they'll tend to do the majority of the time. But again, it sold at a similar price to last time. and sold within a week of going back on the market. So again, screaming for properties in the area because the process still works and people are still buying.
Interesting. Are you guys finding? I'm finding I'm speaking to more investors over the last couple of months. I don't know if you're finding the same. I just feel like the investor crowd has kind of come back into the market a little bit after the crazy couple of years we've had.
I don't know if Dom's worth asking that one about. If you're speaking to investors as well, Dom.
And I know
you're doing the mortgages for them, I suppose, wouldn't you? If you're thinking
I got asked the same thing. I guested with Ian and Mike this morning on the Buy-to-Let podcast or landlord podcast, whatever they call it. These people are still out there, and there's some fundamentals here, guys, and you'll know this because you're active on community pages. But there is still a lot of demand for rental properties, and there's not enough of them. So there are people, professional investors out there that are seeking to add to their portfolio that will be active, and they can afford to buy these places because that's the business that they're in. So I don't think that's going to change. There's a complete absence of social housing policy from successive governments, and there's nobody's even talking about this problem. So I think that will continue. And if we see what I call amateur landlords, and I'm not using that term in a negative way, just people that have had properties that they bought for years ago, like late 80s, early 90s, have probably had enough of it. They're getting on a bit, and they just want to cash out and take their money, which means that you're going to get some stock coming on that is potentially a huge opportunity for professional investors, but also first-time buyers that are looking for a doer up at a good value, that have got time to live in it and make it their own. So I'm really hopeful that we will start to see a trickle of these properties coming on, and as we head into the spring months and people start to get more comfortable with the market, and mortgage rates are still coming down. That doesn't get much coverage in the media. There's now very, very low falls, like 4.0 something on Resi. Buy-to-lets are also coming down. So I do feel like in this area that there is sufficient appetite and bandwidth for people to continue to engage in purchasing, whether it's residential or buy-to-let.
What are the rates like, by the way, Dom, for your average investor at the minute for mortgage rates? Are they?
I mean, they're not dissimilar to Resi. I mean, they're not as cheap as they were, but buy-to-let mortgages they're profitable for lenders because they typically are interest only. Savvy investors will take advantage of the 10% overpayment facility, but for as long as a mortgage is on interest only, that's just pure profit for the lender, basically, because the capital's gone out and everything they get back is pure interest. So I had a visit from one high street lender who said, and they do have a buy-to-let arm, they said there's going to be a big thing for us this year. We want to push the buy-to-let lending because they're getting in lots of deposits every month in savings, and they need to make a profit on that and give a return to their savers. So yeah, the rate war exists in residential. It's going to exist in buy-to-let because the appetite to lend is there. But if banks don't lend money, they don't make money.
Yeah, we've had a question, guys, from Mr. Macbeth. So I don't know if Dan or Neil want to take the lead on this, because I think this is, I imagine, a move which is probably quite typical for you guys in the area you cover, the family upsizing.
Yeah.
Who's maybe had the valuation 12 months ago and had the kind of mapping their finances based on what is now old information. So is there any kind of hot takes you could give on that kind of move?
Yeah, definitely. And ironically, the lady that I literally spoke to before jumping on this, same situation. They were literally working out their numbers last year and then kept in contact with them and now going back out. But they asked the same question of, what's the process? Do I need to start looking? Definitely work out your numbers. That's what we're there to do. We'll go out and we'll give you an idea on realistic value for your home. Speak to your mortgage advisor, which I know they're already doing, which is good, and work out what you can afford, what you can look up to, and don't dwell on the fact. And a lot of people do this. They'll look at, and we always speak about this. They'll look at, right, well, my property is worth 10 grand less than it was 12 months ago. But if you're upsizing the property, that was worth whatever it was 12 months ago is now worth 15, 20 grand less. So it's all relevant and realistic, or relevant to your move and your situation. But yeah, have the valuation, work out your numbers, speak to your mortgage advisor, work out your numbers from that side of things. The great thing at the moment, and this is what I said to the lady earlier, the great thing at the moment is if you were trying to get out viewing a property 6 to 9 months ago and you were on the market, most estate agents would have told you, for want of a better word, get lost. The market was that hot that most estate agents wouldn't even entertain it. Obviously, the way that we work, we try and help where we can, but because it's so quick, most estate agents would only entertain you if you were sold subject to contract, small chain, no chain, depending on the demand. Whereas now, like I mentioned a minute ago, the market, properties are still selling quickly, but the demand is a little bit less in the sense of numbers. So you've got the likelihood or a better chance at getting your foot through the door to show your interest at the same time. So properties are taking a little bit longer to sell than they did 6 months ago, 9 months ago. And people are more likely to go, right, come and have a look at it. If you're on the market, at least then we know that you're in the position soon. So, but yeah, work out your numbers, work out the price, work out what you can achieve on yours, get yours up and running while you're actively looking. Boom, then you're moving. Let's go.
I'd also say on that as well, if you're looking and need more space and you need to upsize, it's only that situation usually only ever gets progressively worse the longer you leave it, because you get more stuff, your kids get older, bigger, or whatever it may be, the reason you need space. So, and the market's always going to be different one year to the next, isn't it? So it is what it is where you are right now.
Yeah.
And everyone's in a similar boat. So you just base it on what you can afford and then go from there, don't you?
What I'm noticing, and obviously, Matt, I don't know if yours is any different to the market that you're in. I know this changed probably 2 years ago, but it was very much, if you wanted more space, look at extending. Whereas now, if you want more space, you look at moving. Extensions are a lot more costly than they ever used to be, aren't they?
Yeah, I think the costs associated with that have just now gone up to the point where it's easier for most people to move.
Yeah.
Yeah.
Do you get a lot of people, Dom, on that, on the finances? It might be a good question for you, but on the finances, remortgaging an extender, and has that died down?
We did loads of that in 2020 into 21. You know, when the market was running really hot, and it was just, for some people, it was just easier to stay where they were and make the most of it. And that was kind of before materials had gone to sort of ridiculous prices and that sort of stuff. I know quite a few builders that were struggling to sort of price effectively, but yeah, I think that's kind of gone out of it a little bit now. There is definitely, make no bones about it, the market is still active. People are still seeking to buy.
Yeah.
Even those that are renting currently are probably looking at it thinking, well, my rent's going up and it's going to keep going up, because landlords that do need to refinance are going to be refinancing from very cheap deals. And I've used this stat before, and it's based on fact. There's 1.4 million people, I think, exiting a fixed rate deal this year. 57% of those people have a mortgage that starts with a 2. And at the moment, they're going to exit on something that starts with a 4. Well, that's a big jump, depending on how much you've got outstanding. So their costs are going up, but the equivalent applies to there'll be buy-to-let landlords in that space, and if they want to pass the stress test, they're going to have to increase the rent. That's because that's your only kind of checkpoint. I think if you look at the stats, rents have been increasing in double digits over the last 12-18 months. So there'll be people out there that have been renting and have been holding off, thinking, oh, maybe it's not the right time to buy. And we sort of come through this cyclical loop of when's the right time to buy. Well, I'll ask you the question: when's the right time to buy it, guys?
There isn't, I don't think. It's when it's right for you, right?
20 years ago.
Correct. It is. It's literally when it's right for you. You can't time the market. You can only time it based on your circumstances. You buy. I saw another stat. I think Halifax released it. Somebody bought a property in 1983. that value of that property on average has gone up by 974%.
It's a lot.
Crazy.
Time that, time that. You can't. It literally, there will be blips, but you've got, sometimes you've just got to decide that you're going to make the move. And I think over time this year, mortgage rates will continue to be under pressure as lenders try to get market share, because if they don't lend, they don't make money, and that's the banks exist to make money, right?
Yeah.
So they will continue to make borrowing money attractive. Rental market's under pressure. There's not a lot of stock out there in the same way as there's not a lot of stock to buy. But over time, I think that will change. People will get used to the new median sort of interest rates and think, well, this is what we're dealing with now. It's not going to go back to where it was. So we need to move on. There's no point waiting sometimes.
The new normal, as you called it last week.
Yeah.
The new normal,
Yeah, we're getting back to it. So I think you upset Mike Dom with
I'm so sorry, Mike. I'm so sorry. and you were so kind to me when I popped in earlier.
Whatever they call it.
That's what a podcast should be called, isn't it? Whatever they call it.
So someone asked what area were the sales in last week. So I assume that's the sales we were talking about with you guys.
Yeah. So IP. Hello. Hello. So 2 of them were in Shinfield. One was in Graysey. They were the 3 houses. They all were between the values of 425 up to 500,000. So that mid-range level. They all went over asking price. And where was yours? Was in Reading, was it, Neil?
No, mine was Lower Early. Yeah, two bedroom in Lower Early. 325. So decent price.
So in our core areas, if that makes sense.
The heartland, yeah.
Yeah, absolutely. Well,
had a question in from Sandy. Best advice for first-time buyers who lack confidence to buy their first home at the moment.
Well, I've got an idea, because this would be a good way to. I was going to say, Dom.
Go.
Because we're coming up to 17 minutes, so to finish off, we could answer this question with one piece of advice each, couldn't we?
Good idea.
So why don't we start with you, Matt?
Yeah, best advice, first time buyers lack confidence to buy their first home at the moment. I think it's scary any time when you're a first time buyer buying a house, let alone after the market's just, I'm not going to say taken a turn, but changed a lot with a lot of negative headlines. I think the best thing you can do as a first time buyer is remember that this is not going to be the home you're going to be in forever. It's not going to be perfect. And to seek out as much advice as you can possibly get, because we're all available. There's loads of resources online. You want to be going into your first purchase as informed as you absolutely can be, because your first purchase can either set you up for your second purchase or cripple you for your second purchase. So it's important to do your research. That's probably more than 1 point, wasn't it?
I've got nothing more to add. Neil, what would your one piece of advice be?
my one piece of advice, and you'll find this funny, I'll take this from now that I'm on the dating apps, the advice that I give myself: you got to shoot your shot. Just shoot your shot, give it a try, get out there and go for it, because until you start offering on things, you won't know. And yes, it can be disheartening if the market is tough and there's 20 other people that want to buy the same house, but you got to get out there. You got to make the offers and try your best. You can only do what you can.
But don't to overpay.
Yeah,
I'll say something similar as well. Just sort of be persistent, because I know if you're ready to buy your first home, whether that's on your own or as you're with a partner and you're ready to buy your first property, you've probably made that decision that you want to do it this year. So just continue looking and make sure you've got your arms of everything. That being your mortgage and your solicitors and your knowledge, and just keep going. You will find a property. There's some really good ones out there. Have some confidence in the market, because there's some great blooming houses out there. And if it helps you, two out of the 3 properties that sold with me this weekend were to first-time buyers. And they were up against other buyers, investment buyers. There you go, Neil's as well. So 3 out of the 4 were sold to first-time buyers who were ready to rock and roll, making offers. So there's your confidence live as it's happening.
What's your one, Dom? What's your pointer? And I've just seen Sanjay's joke. It's brilliant. He loves them.
I love first time buyers, and I use the word confidence a lot when I'm talking to first time buyers. And it's really, confidence comes from preparation, right? And Dan, Neil, you know that I'm big on this stuff. So start your journey early and engage a mortgage advisor that you're happy, you know you can work with the person, and you trust that they're going to help you on your journey, because it is a journey, right? Anyone can go online and compare products, but buying a house when you're a first-time buyer is much more complex. It's much more stressful. You don't know what you don't know. So get somebody that's going to actively hold your hand and put their arms around you until you get your keys, because the best success we have with first-time buyers is those that come to us way before they're ready to even start looking. So we get them in the best possible position over a period of time. So when they do start looking, Neil, and they shoot their shot, they know they've got a chance of hitting the bullseye.
Absolutely. Be prepared. Shoot your shot.
I saw this. This is funny.
We'll finish on Sanjay's joke then, shall we?
He's got more.
I don't know this one. This could be funny or terrible.
How did the estate agent handle their rude client? They showed her some manners.
Sanjay likes it. Look at the emoji. He loves it.
Oh, he's got another one. He's got one
All
more.
right.
What room in your house are zombies afraid of? The living room.
I would have thought they'd like the living room because they can go and feed on them.
Probably,
yeah, true.
Favourite room.
Love it. Absolutely love it. Wow. Same as last time. Obviously, anyone watching this that's not live and you want to fire in either some jokes, because we love jokes, or some questions, we'll answer them next week. If not, we'll be back here Tuesday with some more info.
Absolutely. Cheers, guys.
Peace and love,
gentlemen. Thank you, everybody. Nice to see you.
Next week.
Cheerio.